If you want to learn how to trade just like me, join the community, click the private Discord link, sign up through this membership level, and you will gain access to weekly group mentorship calls for free. What we're seeing from Kaspa is absolutely incredible. For about a month period, we were waiting for this key level of resistance to be broken, and we were knowing that if it does break through that area, we're going to see some explosive moves. And we were looking to hold a key level back down here. And if this level was lost, there was a risk of coming down to 3.9 to 4 cents. But as that level was confirmed and we saw a bullish signal on the low time frame, such as the 2 hour with this bullish divergence over here that we analyzed last week, it's what gave us this opportunity to break the high. We took that opportunity and we skyrocketed to our targets, which was between 5.5, 6 and 6.5 cent. We can see that we completely burst through, and then using these fibs, measuring this most recent huge correction over here from April until May time, then it's giving us these targets to the upside. And in my last Kaspa update, we actually mentioned that there's a 10 cent target. In fact, that might have been in the title and the thumbnail, but actually in the video we did say that it's 9.5 cent. It just looks better to say 10 in titles and in thumbnails, of course. No one wants to see a 9.5 but yeah, that's our target. You might even go through a little bit to meet that 10 cent psychological level, but essentially we are anticipating that this is going to be met as we have broken through this resistance, suggesting that we have higher highs. One thing that could stand in our way is the level that we've pumped into today, essentially, which is the 1414 at pretty much just underneath 7.5 cent. 7.3 cent it is. So if we do get a rejection right now, I'm going to show you in today's update the key levels that need to be maintained in order to meet this 1618 target up here at 9.5, let's just say 10 cent. In fact, guys, there are higher up targets, and realistically these are the best targets that we can get right now with Kaspa. Kaspa's only gone in an uptrend. In fact, we don't really have a bear market to measure. Let me know a chart, if there is a chart that actually has any data before this point. As there is no data, I can only go off of dips to find us targets to the upside. But I'm not trying to suggest that this is the bull market target. I believe that this is going to completely break through this. We just need corrections, as we've saw in the past, to gain further targets to the upside. You can see we've measured this correction. It's giving us targets to the upside. Break the 1 fib level over here and we should continue to this highest target. But this is not a suggestion that this is the bull market target. It is way too close. Bitcoin is nowhere near breaking its all-time highs. It's nowhere near its bull market target, and so why would we anticipate this being the bull market target, although at the moment it is the highest target possible for Kaspa? I think that this is going to be met at some point in the future. There's just some key levels that need to be maintained. As you can see, we've created some higher lows in this area, and the 200 EMA is pretty much at the 1 fib level. So going forward, I just need to see this 1 fib level being maintained, which is 42750 cents, and then we will eventually continue to these targets. So let's just see consistent higher lows over these next months. Now, again, right here, as I mentioned earlier, this is a point where we could potentially get rejected and stop us from getting over to this target. So yes, I've said we need to hold the 1 fib level to go up higher, but there are some levels before that point that need to hold if we want to continue to the 1618 over here, and that's the previous resistance that was holding up since August. So that's the 5190 area to the 5.4 cent location, this yellow area. And so we can also pretty much see that by the time, if it does start to creep down, that this would be in line with that support. So we know that this is the level that needs to be held to continue higher. You don't actually need to come down to the 1 fib level. We're showing you today those previous levels of resistances where you anticipate SR flips. However, there's more to it than just SR flips, previous resistance flipping into support. There are moving averages that we use, and these for me act as my trend lines: the shorter term trend, the mid-term trend, and the longer term trend. So if we can now come down and we hold above the 20 daily moving average, then we can just continue high. You don't even need to come back and retrace back to these previous highs and have an SR flipping previous resistance into support. We can just use the 20 moving average. Again, this is how I use trend lines. I don't really like drawing trend lines unless it's specifically for pattern necklines, like a double bottom or an inverse head and shoulders, or head and shoulders, doesn't matter what it is. That's when I would be using trend lines. But Otherwise, I'm just using my moving averages. I know, okay, this is my short-term trend, lose this, and I'm looking to test this level, lose this, and I'm looking to test this level. There's more to it, of course. Fake outs are included. Look over here, we lost the 55. We confirmed its resistance, but we failed to lose this low, and with that, actually printing a double bottom over here. That's a bullish pattern. Can this bullish pattern reclaim the key level that's now technically keeping us bearish? It did. It's reclaimed the shorter term trend line. So now it means in the short term we should go up. Came down to it again. This is where on the 2-hour time frame we actually spotted in the video some divergences where we're seeing disagreements with my chart and indicator, where we're actually seeing higher lows but lower lows in the exact same location on the indicator. And that was a bullish signal, especially as it was holding the 200 EMA, which, remember guys, going back to the daily, this is keeping us bullish. We just need to maintain above this and we will just keep going up. Can you see how sometimes you come down to it? Sometimes you just need to find supports or bullish signals flashing before this point. That could be your divergences, that could be the moving averages being held, that could be golden pockets being held. And so with that, we're continuing our uptrend. We saw that on the 2-hour right there. That's where the 200 EMA on the 2-hour was. But on the daily, that's the 20. So we know, okay, on the daily, this is suggesting that over the next days, if we can continue to hold above this, we'll go up. And on the 2-hour, it means over these next hours and days, we'll continue to go up if we can hold that 200 EMA, which was there on the 2-hour time frame. So essentially, we just need to, if we do come back down as deep as this area, hold it as support. That's where the 55, your midterm or second layer of defense, is to push us back above the 20 and continue higher to our 9.5 cent target. But realistically, it can just dump back down to the 20, where we'll look for confirmation of support, and then we will continue higher. It could take some days to come down, and by that moment we could be lining up like this, and then it's just a suggestion that we're coming back down to the 6 cent psychological level, and then looking for a break of the 1414 to continue to these targets. Thank you guys so much again for tuning in. Like, subscribe, comment, and share. And if you want to get educated, I have multiple things in place for you guys to get to my level of trading and charting, or whatever you want to call it. Use the links in the description down below to actually take action, whether you want to ask questions on Twitter or go straight to the website. Otherwise, listen to what I have to offer. If any of you are interested in learning how to trade just like me, there's multiple options. Click this ebook. It covers all the strategies that I use in these YouTube updates, so you will have all the same skills. Covers the Japanese candlestick, chart patterns, support and resistance, why I use EMAs over trend lines, Fibonacci's, divergences, and again, using these all together to profit using them. I've also got a discount on my course at the moment, which ends at the end of this month. So that's down to £100. You also gain free access to my Discord community for the next 3 months, where you can expect to be a part of 12 to 24 group mentorship calls. If you want something that's a bit more personalized to your needs, then join my one-to-one mentorship plan. You can choose 5 or 10 hours of my one-to-one help, and included will be the 3 months free in the community, as well as my 6-hour long video course.